Australia is currently experiencing a rental and an affordability crisis. Population growth is surging, vacancy rates are at record lows, and property values and rents keep climbing. And yet, despite this overwhelming demand, we're not building enough new dwellings. Have you ever wondered what the real fix is to Australia's housing crisis? Well, it might not be what you think. Here's a surprising truth. The only way we're going to solve this crisis is if established house prices actually rise. Now, I know it sounds counterintuitive, doesn't it? Maybe even a little controversial, but unless prices climb high enough to make new developments viable, we just won't get the apartments and the new homes we desperately need. According to international property consultant CBRE, Australia is going to complete just 52,500 new apartments this year in 2025, down from more than 64,000 last year. That's 30,000 fewer than was forecast only a couple of years ago. And the simple reason is the economics don't stack up. Developers can't sell apartments at prices high enough to cover today's construction cost. Feasibilities apparently remain about 20% underwater, which means that if developers build now, they'd lose money. The gap between what it costs to build and what people can pay has never been wider. So today I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to unpack why we're not building enough, what's really driving the shortage, and what it's going to mean for property values and rents moving forward. Hello, Andrew.
Yes, good day, Michael. And I think, even with that data that you mentioned in terms of apartment completions, it is really reflecting what's happening in the marketplace probably 3 years ago, the completions of apartments, because they're, 3-year-old approvals, basically, and maybe even 4-year-old feasibilities. But we have seen a surge in new apartment approvals this year. But that's yet, will not fix anything for a couple of years till when they become completions. And the problem with the surge in approvals that we've had for units this year is we're seeing a counter with a significant fall, particularly in Brisbane and Melbourne, in approvals for houses. So it's like, 6 of one, half a dozen of the other here. And, it just reinforces the lack of supply, of new supply coming through. And as we'll see today, it's, when we look at the ground floor in terms of the supply line, which is land, that's also looking very bleak because, you've got to start with a block of land somewhere if you're going to build a house. And, of course, it's not relevant to apartments, but there's no real good news on the horizon in terms of restocking our undersupplied housing market with more building blocks.
Well, the gap between what it costs to build and what people are currently paying has never been wider. Now, we're going to discuss the latest construction cost figures from My Housing Market in just a moment. But if you look back over the last 3 years or so, they've jumped considerably and land costs have gone up and government levies remain high. But for developers to start all those new developments, banks are still going to want them to, make 70-75% pre-sales before financing, and buyers are reluctant at the moment to commit off the plan. So even though we've got all those development approvals, developers want to get a margin and they just can't get them at the moment, Andrew. So what's been happening with construction costs?
Look, it's very interesting, Michael. Of course, the big picture in terms of the story of house building costs was that, house building costs have been, reasonably stable or were reasonably stable. House building is a highly competitive industry. Easy entry and exit means that, builders would typically forecast around about or expect around about 3 to 4% inflation in building costs on an annual basis. But the previous government during COVID introduced the home builder policy, which brought forward a massive amount of demand. We didn't have the building materials or the labour to match that demand. House building costs went through the roof. It was a significant factor in terms of what was a spike in overall inflation. But we started to see, obviously, as that demand started to ease for new houses, we started to see the escalation of building costs starting to ease as it was expected to go back to perhaps a more normalised environment of maybe 2 to 3% per year. But interestingly, Michael, we've seen a reversal in that trend over the past 6 months where house building costs have started to rise again and becoming quite concerned, the rate of growth, and particularly given that we've seen that the number of houses approved for building starting to decline. Now, whether that was a response to higher building costs or whether, that was creating higher building costs with with less demand. But nonetheless, it's still a very bleak outlook there for the cost of building a new house. With even though we've seen the latest index data from My Housing Market reasonably stable over July, the actual annual inflation rate is of concern because even though that's eased marginally, house building costs are rising at around about 6.7% per annum, Michael, which is about double what we had, in the longer term pre-COVID period. And that only, of course, is going to constrain, the capacity of the industry to move forward, with projects, because obviously, they've got to absorb those higher costs, to become for a project to be feasible. So it's just another, factor that we have constraining house building costs and constraining supply, or constraining development and constraining, obviously, supply. Now, there is a conversation going on about whether this is, because we can't match the labour requirements for building because of mismatch between our migration profile and the need for particular skills, and is this because there are, significant barriers to bringing in skilled labour through unionisation, through skill, the match of the actual skills required. So there are a number of factors here that may be constraining house building costs from moving back into a more competitive environment, which would allow more building to occur, So there's really no good news here. And with issues over the price, or the price of electricity now raising question marks about inflation, now we've also got higher house building costs, which is a significant part of the housing costs that are modelled by the ABS for the inflation rate. So easing in terms of the latest data, the house building cost index, but the annual results are still a lot higher than I believe the industry needs to be fully competitive, and that we need to, match supply with demand.
Well, unfortunately, prices are not going to come down. So even though they haven't risen much in July, they have risen over time. And in the future, inflation will work on that higher cost base. So what's the answer? I guess, as I said at the beginning, in my mind, one answer is established properties are going to have to increase significantly in value, so the gap isn't as wide and people will start buying new properties. And we're seeing that happening at the moment. It's the beginning of the spring season. We're going to talk about auction results in a moment, but the buyers are out there. I guess affordability is an issue, though, isn't it?
Well, that's right, Michael. And just reiterating what you were saying in regard to the absolute increase in house building costs, if we look back to the period just prior to the previous government's home builder allowance, house building costs since mid-21 have increased by 60%, Michael, which is a significant escalation, obviously, in over a 3 to 4 year period, 60% increase in the cost to build a house, and still running at a 7%, near 7% per annum escalation factors. And when we look at the breakdown in terms of state by state, we did mention just before that house building approvals in Brisbane have flatlined recently. In fact, are lower than where they were at the same time last year. But house building costs in Brisbane, Michael, are up by 4.3%. Over the quarter. And so it looks like a little bit of that story, that higher building costs may be constraining development in Brisbane. And when we look at the annual growth rates for house building costs, Brisbane is up by 9.6% over the past year, Michael, and Adelaide up 10% is the leading performer of the major capitals. So I guess, particularly Brisbane, where, as you've mentioned, we're seeing a significant growth in established house prices. It's I guess leading the charge because of the increase in building costs, which may be having an impact on house approvals in that Brisbane market, which is a little questionable, because you would have expected perhaps that the Brisbane market has more potential, particularly to the west and to the north, for broadacre development, but it's obviously not occurring at the moment.
Now, building costs growth has varied from state to state as well, hasn't it?
Well, it has, Michael, and as I said there, Brisbane and Adelaide has had the highest growth over the past year by 10%. House building costs, Brisbane up 9.6%. And as I said, these are significant rises, and they do constrain the capacity of house builders to be profitable. Just mentioning that we typically in the pre-COVID period, we were used to 2 to 3, maybe 4% increases in house building costs. But I think it's also interesting that when we compare the actual building cost on a capital city by capital city basis, that how much more expensive it is to build a house in Sydney compared to the other capitals. If we index Sydney at 100, we can see that it's actually 17% more expensive to build a house in Sydney. House building costs are 17% higher, 23% higher than Brisbane, and over 40% or nearly 40% higher than Adelaide and Perth. I guess that reflects the high cost of housing in Sydney, which is it part of the high cost of building there, or is it high costs of housing drives higher costs for buildings going forwards? It's interesting how that lines up in terms of the relativities for house prices, established house prices in those capital cities.
Yeah, let's look at the cost of land, because we talked about apartments a bit, and the fact that we are going to require more apartments, more medium density living as our population grows. But still, we're wanting to develop new estates, new houses for the young families. The cost of land has risen significantly, Andrew.
Again, yes, Michael, and again, it's Brisbane, which is sort of leading the charge. And as I mentioned, you would have expected perhaps that Brisbane has more potential for broadacre development.
Yes.
Certainly, the similar potential to perhaps Melbourne, which also has areas that you would expect to continue to be suitable for broadacre development. But Brisbane, we've seen house building blocks, and these are just average house building blocks, up by 19.1% over the year to August, and a very low number of actual sales, just 37 sales reported, Michael, compared to Sydney 167 and Melbourne 114. So that just, again, is just reinforcing that undersupply in the Brisbane market. And the median price for a house building block in Brisbane is higher than Melbourne and everywhere else except Sydney, which, no surprise again, given those high house building costs and high established house costs in Sydney, is well ahead of everywhere else, with a median of 720,000 there for a building block, Brisbane at 530,000, but ahead of Melbourne at which is at 503,000. It all keeps pointing to that Brisbane market in terms of a continuing undersupply, Michael, in a market that you would have thought would have been geared to be providing more supply and perhaps, a better outcome in terms of house building costs. But it's not looking positive anywhere in terms of either building approvals, house building costs, or the price of a building block going forward. So if we've got these issues at the ground level, if you understand what I mean,
Yes.
how are we going to fix it if we don't have enough land to build on? And it's still a significant part of our housing profile is a detached housing, Michael. We can't all segue to apartments, and that's still not the complete preference for consumers. There's still a very strong demand for those, outer suburban detached housing environments. And we're going backwards in terms of providing for that demand. And in those big those big markets, in terms of development markets such as Brisbane. And of course, we need not mention all the extra demand coming through in Brisbane as a result of the Olympic Games to come in 6 years' time.
Two things come to mind there, Andrew. Firstly, the fact that this is not ugly, greedy developers, but it's actually a lot of costs that have been imposed by various levels of government, including local councils requiring development costs, where developers have to provide money for roads, drainage, open spaces, state governments, including stamp duty, federal governments as well, GST. All these costs are included in land costs. But I'm also surprised with your chart showing how small the average new suburban compared to the old days, Andrew.
Well, 100% right. Of course, Michael, that red tape and green tape, all that tape is still an issue in terms of constraining supply, no doubt about that. And it's also interesting that we're actually now have a smaller footprint in terms of the size of these house building costs, which is continuing to fall dramatically. And, in the old days when we used to talk about the house building block. It was the quarter acre block. But, you can forget all about that now. A quarter of an acre is like a farmlet in today's comparisons. They're very, very small blocks compared to the old. And look, people have gravitated away from the need for a backyard, etc. But it should mean more bang for your buck, shouldn't it? Because you've got more potential because people are happy to accept a smaller block of land, a considerably smaller block of land. So you think you'd be able to provide more, but no, it's still, as you said, those constraints, red tape and green tape constraints that come from government policies that are holding back a lot of the supply. And of course, there has to be a balance in these things, but I think we're far from getting that balance at the moment, Michael.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, we're into spring now. We had a lovely spring season weekend in Melbourne over the weekend, and the auction numbers increased. In fact, they surged around Australia.
Yep.
Not unexpected at this time of the year, but was there the depth of buyers there, Andrew, to take on all these extra properties?
Well, look, yes, Michael, I think that this is interesting because despite, the typical early spring surge in the number of properties coming into the market and all those extra choices, rates have still held up pretty well and are unequivocally strong. I mean, these are strong clearance rates from week to week. And we will have a big weekend this coming weekend, Michael, for auctions because it's the pre-grand final weekend. And of course, agents and vendors avoid the football grand finals that weekend, avoid them from having an auction. So they front end load it. So the week before is a Super Saturday of auctions and we will get some big numbers of properties coming into the market. So that's a test for the market, obviously. More choices for buyers and more competition amongst sellers. But nonetheless, we had a preview of that on the weekend and the market's held up pretty well. Sydney 989 auctions higher than the week before. Still a very strong clearance rate for Sydney, which has just kept on keeping on over the past couple of months. 77.1% clearance rate. Still 10% higher than where it was the same time last year. Big rise in Melbourne. 1,184 auctions. Again, a preview, I guess, for the big numbers that would be expected over this coming week. 4%, similar to where Melbourne has been tracking again over the last couple of months, and again 10% higher than where it was a year ago. Brisbane's really started to show some energy in its auction market. We know Brisbane's typical auction market results are around 40 to 50%. It has a different culture and a smaller number of auctions as a proportion of overall sales compared to the other capital cities, but still a 55.8%, which is a very solid result for Brisbane. Similar auction numbers, and again higher than where it was at the same time last year, Michael. And we can see the same results there for Adelaide and Canberra, holding up despite higher listing numbers going forward, Michael. The trends are quite clear. We've had a lift in auction clearance rates in all our capital city markets, particularly following the interest rate cuts in February, then in May, and of course now we have the energy of the August interest rate cut to drive our marketplaces.
There's going to be all those new first home buyers in a month's time or so who are suddenly going to have been given a handout from our government.
That's right, Michael. So it's all about demand. Auction markets are reflecting that. We'll have more supply coming into the markets. It will test the markets. But I would be surprised to see if we saw any significant downshift in clearance rates, which have really held up very well in favour of sellers over really the past 3 months. It's been a very strong market, and continuing to provide plenty of confidence for those that are wanting to test the market at the moment. And of course, most buyers are sellers and sellers are buyers. So is everybody happy? Well, that is never the case, but
No.
it's certainly a very positive market at the moment. And as I said, we're coming up to the spring, the first of the spring Super Saturdays this coming week. So it'll be interesting to see how the market responds to, particularly the Melbourne market, responds to be another lift in the number of properties going under the hammer.
Yeah, look forward to catching up with you next week when we see how that goes. Catch up with you next week, Andrew. Thank you.
Thanks, Michael. Yes.